Can you hear me?
Yes, of FinTech Connect. It's fantastic to have you here again. Thank you for joining us. We're opening with a chat with one of the busiest men in FinTech, Matthew Sharnoff, who runs the FinTech Investment Banking Division of Bank of America. Matthew, as I said, is one of the busiest men in FinTech. He's also one of the nicest men in FinTech. He's helped us out a huge amount doing this fireside chat, but also joining the panel last night. He's also one of the few men I'd wear a smart shirt for on the hottest day of the year in the UK. So thank you, Matthew. Welcome again, and thanks again for all your support over the past few months. From my side, I'm keen to explore some of the things you discussed last night, as we were just talking about. Can you just give the audience a little bit more insight into your role?
Sure, happy to do it. So I've been in investment banking for about 21 years between Merrill and B of A, and run our global FinTech investment banking business. Basically, my seat is quite simple. I help firms raise capital for growth or for secondary. We do it through equity, through debt instruments. We help companies either buy or sell. So whether it's merger and acquisition advisory work, or whether it's capital raising work, those are really my key responsibilities on a global basis for the bank.
Great. And one of the things I wanted to touch on last night is that you mentioned you've seen a shift from what you described as FinTech 1.0 to a more broad ecosystem. When did you see this paradigm shift? Has it been driven by COVID, or were you seeing that before?
Well, the honest answer is we have been seeing a major shift in FinTech really over the past 5 years. And I would say COVID helped really accelerate that shift. So the shift's been moving and has had the roots for many years, but COVID was really the key catalyst to make it more visible and transparent, to really help drive things home. I think the shift in FinTech has really been multifaceted, and I call it, FinTech 1.0 moving to 2.0. I think it's in a number of different areas. It's in the front office with more digital engagement, interaction, how to work with clients seamlessly through technology in a much more digital, mobile facing environment. It's also driven by some of the core infrastructure and core rails and how people connect. So, the behind the scenes, the middle and back office, right? The elements that not a lot of people fully appreciate and touch, but beyond the direct corporate landscape that most people associate FinTech with, some of the most prominent names in FinTech are companies that you would never see day in, day out in your core life. Platforms like Stripe or Marqeta, infrastructure and rails, and service providers that are really driving innovation in the middle and back office, making it easier for B2B companies to do their job, either through better platforms, products, and services. So we've really seen a lot of shift across the full ecosystem, and that's been a shift to both digital and to, I would call it new infrastructure, which is really exciting. I think the other piece around, I would say that the change in the broader FinTech market has been convergence with just traditional technology. And we've seen it in terms of, spaces like the payment space, for example, having more and more convergence with software companies, where software platforms are figuring out ways to monetize their platform through new FinTech products and services. So embedded finance products like payments or credit, lending. We've also seen it in the internet, right? Where many platforms, good brand names like a Shopify and others, really driving activity through commerce, which is the blend of both FinTech and traditional internet. So there's a lot of different ways in which we've seen, I would call it overall technology partnership development and digital change in the FinTech ecosystem. But again, the roots have taken place over many years, and COVID has really accelerated it. And I also think the pace and the speed of how things are getting done are much more efficient. You take out day-to-day commutes, you take out 10-hour flights on a plane, and you sort of smash it into a day where people are working longer and working harder, and I think people are able to accomplish more in sort of this very efficient and very new world that we all kind of live in.
Do you think
So,
people are working smarter as well?
well, it depends, right? I think the juniors are not. I think some of the senior bankers are. The last time I traveled internationally was early March of last year, basically the week before they shut us down. 1 hour board meetings in California are no longer required to be in person right now. So, getting on a flight at 6 a.m. and taking a red eye home and taking hours away from your life longer term, I'm not sure you go back to a 1 hour, a day of travel for a 1 hour board meeting in California. I think there are certain efficiencies that you will be able to take advantage of. And I think people are just going to be much more thoughtful around how they travel and how they conduct their sort of their business going forward. Travel will be much more rich and oriented around, experience and, having an impact on a client, not just showing up for an hour board meeting. Most of the board meetings we've been doing are WebEx and Zooms, and they're super efficient and quite easy.
Yeah. One thing we've spoken about a lot yesterday was a shift from financial institutions' perception of culture and a shift towards a more fintech culture. Are you seeing that? Are you seeing kind of more agility and more kind of startup approach?
It really depends on the culture and the organization. I think traditional banks have a very different ethos and mindset than younger, more entrepreneurial startups. Banks, have real infrastructure and have very ingrained cultures that have been established over many, many years. And approach to go back to the office. Apologies. That's one of the issues with working from home with background noise. But ultimately, I do think that there is a major difference in terms of how we see younger entrepreneurial technology companies interact, and how banks are interacting in today's day and age. So I don't know if banks are shifting to that mindset. I'd still say that there are natural differences in approach to investment, approach to building culture, approach to building businesses. There's just, look, that's what makes the world unique, right?
Yeah. And you touched a little bit yesterday as well on big tech. Do you think there's a shift in perception from fintechs seeing big tech as an opportunity partnership rather than as a foe?
I think this world is all about collaborating and building strong ties both to new entrepreneurial startups. Apologies, 1 second here. I think this world is all about building connectivity with both the large and the small. It's having deep relationships, it's sharing thoughts, it's collaborating. I think this world is, you have to be open and thoughtful about working with both the large tech and sort of the hyper growth young entrepreneurial innovators. I think just having that collaboration is really important and helpful to your overall mindset. I think you can learn from both the large and from the small, and ultimately partnering with and building and collaborating with some of the larger tech giants can be very helpful, especially to many of the larger banks and larger fintechs that we see that can really learn and grow and quite frankly build off of some of the large technology companies' platforms. So I think the ecosystem is really about collaboration. And so whether you partner, whether you build it, or whether you buy it, I think you need to have insight into what others are doing in order to make sure you've made the right choices in life.
Yeah, yeah. And do you think it's getting easier for fintechs if they have the right product to raise equity and get support from incumbents?
I'm not sure I follow the question, Lawrence.
So as a startup, do you think it's easier to get support?
Well, look, I think startups have clearly benefited from the shift to an all digital environment. I think it's easier today to get a startup up and running and at scale for a number of different reasons. Cost to capital, incredibly efficient. There's also a lot of capital on the sidelines looking to fuel growth. Companies can operate in a much more digital environment today versus having the core infrastructure of offices. So I think there are so many efficiencies in raising the money, so many efficiencies in building a platform without the overhead costs that you used to have. And I think ultimately people are exploring partnerships and opportunities to expand and enhance their own core platform from some of the large traditional players, not just the core, the VCs that are helping fuel some of the entrepreneurial growth. I actually think it is easier to have some of the newer next generation innovators and startups have more momentum and have the opportunity to reach scale at a much earlier stage in their adoption than we've ever seen before. And this is true across the broader technology landscape. Now, not all business models will survive, but I think business models today can persist longer and have more opportunity for success because of the current environment that we're living in. So that's kind of my take and what some of the implications are around some of the newer startup and innovative platforms, which is there's an opportunity today to have more winners than losers because of the core environment that we're in. That being said, even bad business models are going to be around for longer given the current flow of capital.
Yeah. And you mentioned yesterday that you're busier than you've ever been, and you actually wanted to say that you're seeing a trend for the next 3 to 5 years from consolidation to acceleration. Is that based on to avoid a cliche, but the new normal?
Well, look, I just think there are so many different trends driving my industry from an all-in perspective. So the fintech industry has really become very thematic, right, in the overall landscape. I think when you step back and you look at what's happening in the market, investors really care about growth. Investors really care about durable growth. And fintech happens to be one of those unique sectors where there's the confluence of growth and durability. These are really, really important companies, and they're disrupting and changing the way we're doing traditional financial services. And we think there's real sticking power for a number of these companies, not all of them, but for a number of them. So the sector's in vogue. Corporates are really benefiting from what we're seeing in terms of overall growth equity trends, investment from venture capital, and then investment from corporate venture capital. It's deeper, it's easier to reach companies. We're seeing a major investment opportunity in many of these platforms. So we're seeing more growth equity come into the business, both in the form of private placements and through the equity capital markets through IPOs. Yeah. We're seeing new products and services that are in the market, different ways to help fuel growth, SPACs, for example. So we're seeing different areas of capital really coming into the ecosystem, which is, I would call it building out the TAM. It's giving more people more access to capital to build and grow. And this isn't just happening in the US, it's happening globally. So when you think about the roots of why we're busier and why there's more activity, it's tremendous growth on the capital raising side, tremendous growth globally in terms of funding of fintech. And ultimately, the larger, more scale corporate players who we've traditionally banked are also taking advantage of this by either participating in some of these corporate venture capital initiatives or quite frankly, partnering or working with these firms either through M&A initiatives or through other collaboration events to really either help fuel the growth or to consolidate it. And they're consolidating it by adding new product, service, capabilities, or building out their distribution. So there's so many different trends that we think are driving investment into the space, which is increasing the number of companies in the space, and quite frankly, the ease and efficiency to do M&A. Those same trends on cost of capital and the same trends for growth. Larger corporates want to do the same. They want to leverage their cost of capital. They want to leverage their multiples. They want to leverage their platform to really build out and enhance their growth capabilities. So we're seeing activity hit on both the capital raising side and the M&A advisory side. And I think as a result, levels of deal activity have really reached record levels in our space, both in terms of small raises and in terms of mega rounds as well from a capital raising perspective.
And is it particularly the payment space, or is it across fintech?
It's across the broader fintech landscape is the honest answer. I think payments has clearly been the most active, but what we've also seen is the expansion of fintech above and beyond, I would call it the traditional 1.0 crowd, where historically we always define the fintech space as payments, financial software, and other sectors like market structure, to now be much deeper, where a number of traditional financial services sectors, whether it's been asset management, wealth, insurance, banking, have all moved down the path of all things digital. So digital expansion has really helped driven a number of different areas within fintech, where whether it's mortgage, whether it's lending, whether it's insurance, these are all now insurtech or digital banking. So that the halo of fintech has really dug very deep roots into traditional financial services. And as a result, our sector and the traditional clients that we serviced out of fintech 10 and 15 years ago are now very different today. So our market has grown. The amount of companies that we touch that want to be called fintechs have clearly gotten deeper. And I think that's the confluence. More deals, bigger universe of companies to now bank. And I think that's really helped the sector and some of the thematic elements that have driven growth around it.
Fantastic. Well, one more question, because I know how busy you are, and I appreciate you giving this time for us. Coming out of the pandemic, what on a professional level and looking at the industry, what are you most excited about?
What am I most excited about? I'm excited about seeing clients physically. Getting out and, I kind of view investment banking as a really, important business for so many different things. The wealth and the pulse and sort of the views of the capital of capital formation, capital markets, transaction activity, deal formation is sort of the bread and butter of what we do. So the ability to share those insights with clients live is something that I'm really looking forward to. Love the all virtual environment, but it does get tiring. So I would say that, what I'm looking forward to is getting out and seeing clients, and quite frankly, getting back into the office on a more regular basis. I think it's really important to build relationships with our team and our juniors. We've onboarded so many new bankers in this environment, given how busy we are, that have never stepped foot in the office and don't know what it's like to be part of a big, comprehensive global team. And I think it's really important to, build that culture and collaborate not only with your clients, but with your core employees. So I think getting back into physical contact, into the real field of battle, and sort of building on those relationships and reestablishing culture, that's what I'm really looking forward to.
No, I completely agree, and I think kind of a lot of people would say the same. Matthew, I appreciate your time. I know you're one of the busiest men in the tri-state area, so thank you so much for doing this, and thank you for the panel last night. It's been a pleasure. Thank you again.
Lawrence, thank you for the time. Take care.
Cheers.